Hi guys. Today we will analyze Coca-Cola stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been a good performer in the overall market. The long and short-term trends are both positive. Support levels are around $62.90, $61.50 and $60. Next support levels are around $57.50, $53.80 and $51.50. The stock is at all-time highs, which means there is no resistance level just above it. In the last month the stock has been trading between $60 and $65.50 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 17 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around -1% per year, for last 5 years. We see that the average profit margin of the stock has been around 19% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 168% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Coca-Cola Company: bad, average, and good. First scenario. Coca-Cola will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 2%. Future profit margin would be a low, 18%. Future free cash flow to net income rate would be a low, 90%. In this case, the fair value of the stock today would be $34. Second scenario. Coca-Cola will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 4%. Future profit margin would be average, 19%. Future free cash flow to net income rate would be average, 95%. In this case, the fair value of the stock today would be $40. Third scenario. Coca-Cola will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 6%. Future profit margin would be high, 20%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $48. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 2.25. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Coca-Cola, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 26. Again, I will use 3 different scenarios for Coca-Cola Company: bad, average, and good. First scenario. Coca-Cola will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 2%. Future P/E would be a low, 15. In this case, the fair value of the stock today would be $17. Second scenario. Coca-Cola will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 4%. Future PE would be average, 17. In this case, the fair value of the stock today would be $23. Third scenario. Coca-Cola will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future PE would be high, 19. In this case, the fair value of the stock today would be $31. As you can see, today the stock is overvalued, $65, even if we expect the company's high performance in future. While the company has a good profitability rating, there are some minor concerns on its financial health. While showing a small future growth rate, 4 to 6% per year, the stock is overpriced at the moment. The stock is at all-time highs. Coca-Cola is a dividend king. It has raised its dividend for 60 consecutive years. I may consider buying the stock for the dividend, when the stock drops below $48. Company's strengths. Coca-Cola is a leading producer of soda, juices and juice drinks, and ready-to-drink teas and coffees. Core brands include Coca-Cola, Sprite, Fanta, Maid, and others. The company sells beverage concentrates or syrups, and finished beverages. By volume, Coke is almost 3 times the size of its next largest competitor in the global non-alcoholic ready-to-drink market, which begets scale benefits. Despite a greater focus on marketing efficiency, its ad budget is still unparalleled and should help maintain consumer awareness and brand relevance. Revenues should continue to improve, as economies reopen and consumers return to restaurants and, eventually, to amusement parks and sporting events. The company's long-term financial objectives are to reinvest in the business, continue to grow the dividend, consider strategic mergers and acquisitions, and use excess cash to repurchase shares. Coca-Cola is a dividend king. It has raised its dividend for 60 consecutive years. It has a yearly dividend yield of 2.7% at the moment. Coca-Cola's return on assets of 10% and return on equity of 42% are amongst the best returns of the industry. Its profit margin of 25% is amongst the best returns in the industry. Risks. In the near term, Coca-Cola faces significant risks from the pandemic, and has been hurt by weak sales to restaurants. The company must navigate macro challenges, including supply chain disruptions, labor shortages, inflation and potentially higher interest rates. As a major multinational corporation, Coca-Cola is exposed to substantial currency and commodity price risk. High-growth categories such as water and ready-to-drink coffee have been more conducive to intense competition, given the firm's relatively weaker brand equity in these markets. A bigger concern is that the company's core products are perceived as being unhealthy. There are growing concerns about obesity and the harm caused by sugar-sweetened beverages, that may hurt demand for many of the company's core products. Unfortunately, its diet beverages are not much better. Coke could be hurt significantly if its independent bottlers ran into credit or financial problems, or if the company's business interests did not align with the interests of bottling partners. Coke would also be hurt if it was unable to defend its intellectual property rights, particularly as it expands to more emerging markets. Based on estimates for the next 5 years, Coca-Cola will show a small growth in revenue and EPS. The revenue will grow by 6% on average per year. The earnings per share is expected to grow by 6 to 8% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.